with you today. Your take on the today's trade. We saw some nice gains for the local market, up about 0.5%, but what were the volumes like?
Well, the volumes were pretty typical of what we've been seeing lately, around $3 billion worth of stock traded. And while the market did sort of finish above that 4,500 level on the ASX 200, seen as a bit of a probably technical and psychological type level on the market. Really what you want to see on technical type charting when the market does break technical patterns would be some volume in the trade, and there the volumes just continue to be quite low. But as expected, we've been seeing school holidays over the past couple of weeks as well, China being on holidays for a week. So the volumes there are not coming back into the market just yet. But it was a solid performance because the leads from offshore were soft. So some of the macro stories about global growth, including the IMF downgrading Asian and global growth, wasn't the greatest scene setter for the market today, but really materials stocks pushing higher, led by the iron ore. But if we look at the big weightings on the markets, the financials did quite a bit of the heavy lifting as well. The financial sector up around 0.5% today. But if we have a look over the past 4 months, the Aussie market started to perform quite well. It's up about 13% since those lows we saw on June, and that really has been driven by the financials. The financial sector up around 19% over that period, where it has been the materials and other energy and cyclical sectors which have dragged a little bit, but they've started to take off a little bit over the past week. The Aussie dollar also managed to gain ground today. Higher commodity prices, possibly a little bit of bargain hunting there after the falls we've seen in the Aussie, helped push that higher back above the 102 level, which is probably a little bit disappointing for many sectors of the economy who have been hoping that with some RBA rate cuts we could see a sustained move lower in the Aussie dollar, which would be a significant benefit to many players in the market at the moment.
Season kicking off tonight in the States. What are the expectations, and does it have the potential to really shift the market's perspective?
Well, this should be an interesting one, I think. I mean, on one hand, earnings will be very important. Certainly a lot of commentary and concerns around the slow rate of recovery in the US economy. And a lot of the US market performance has been attributed to how well companies have held up given the macro environment at the moment, and the fact that it has been, I think, 11 straight quarters of earnings growth for the S&P 500 companies. But I think this earnings season, which is due to kick off tonight with Alcoa, this is going to be the first of those ones where we should see earnings fall on the previous corresponding period. A survey saying around a 2.7% drop in earnings for the quarter. Now, if we look at Alcoa, which will be the first one to report tonight, Alumina trades on the ASX, and its major asset is a 40% interest in Alcoa, and that stock actually dropped around 5% in trade today. So that's not a great backdrop for the start of earnings season for Alcoa tonight. But certainly it might be a little bit of a tough period for US stocks. We've seen a good run up on US markets, and certainly at these kinds of levels you might think US stocks are looking pretty, the valuations might be a little bit lofty or fully valued. So if these earnings don't come in and sort of support that kind of valuation levels, then we could see a drop off in markets. But it'll also be some of the macroeconomic factors such as the fiscal cliff coming up, which will be very, very important for the American market. I think resources are expected to be the worst. Lower commodity prices and that slowing in Asia is going to hit raw material stocks. But financials are expected to hold up quite well. Earnings for financials and banks are expected to come in around 10% higher for the quarter as per the same quarter last year. So I think the market will be also looking at earnings guidance, which I think will be soft given the uncertainty around the global growth picture at the moment. Moving forward, it will be very hard for companies to come out with very positive earnings guidance looking forward. But certainly an interesting survey by one of the news websites was it's tracked the expectations of analysts over the past few months. I think earlier this year they were expecting around 2% growth earnings for the quarter. That's dropped back to minus 2.7% now, yet the American market has still managed to climb higher over that period.